You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
All right, thank you OIC for having us all here today. Clearly, you saved the best panel guest for last, right, audience? I think you'd agree with that, right? Okay, so
It is standing room only, but yeah.
So this is the panel where we're taking out our crystal balls, looking at oracle cards, tarot cards, putting on our fortune teller attire, and sharing with you what we see. I have bohemian blood in me, so you'd think the gypsy in me would actually be really good at this. Unfortunately, I've yet to master my fortune telling skills, otherwise my brokerage account would be a lot better. Fortunately, I have a great group of gentlemen up here with me that are going to enlighten you. And since you're clairvoyant, you already know that I'm going to ask you to please take a moment to introduce yourselves. I can't see you. Go ahead.
Jim Hyde, I'm with NYSE. I run Head of Business Development and Strategic Partnerships.
David Cross, co-head of options at Dash Financial Technologies. I oversee our execution technology and execution services businesses.
Kevin Luthringshausen. I go by Lex, though. I work at Tradier and Tradier Brokerage, retail online trading.
Geoff Gaiss with Trafix, and I'm head of derivatives there.
All right. So we went back to the tape for this exact panel from 2021 and 2022 to provide some context and continuity. Not to worry, though, we're not calling anyone out on their predictions, whether they were good or not. That just wouldn't be nice. But we are going to discuss trends and predictions for people, product, technology, and regulation. I'm also going to pepper in a few lightning round questions to, well, just keep it light. Ready, guys? All right, first up, on the 2021 panel, it was said that we're in a new normal. Where are we now? Is it a new normal, an old new normal? Dave, talk to us.
Yeah, I mean, I would say we are in a new normal. I'd say it's a little different this time, and I feel like we always say it's different this time. So I guess what do I mean by that? Sure, recently, volatilities have come in and we've kind of reverted back to, seeing a shift from single stock equity options to index and ETF options as we've kind of seen things calm down and correlations come in. But yet it's different this time in the sense that I'd say the adoption and participation rates in 2023 in the last year are significantly higher than what we've seen in years past. So I'd say in that sense, it is more of the same. We get these crises. They're different each and every time. And the options market definitely sees that volatility enter into the marketplace. And then things eventually calm down and we see a return to normal. So yes, we see that. But again, what's different this time is the adoption and the participation rate is substantially different today than what it has been in the past. And I think people are more comfortable trading options, of course, but also more complex structures. So not just single-leg options. We're seeing more complex types of activity. We're seeing more comfort with technology. People are more comfortable trading these electronically. So again, I don't think any of us have a crystal ball, so we don't know when the next crisis or event is going to happen. But what I think that we will see is the adoption and participation, both domestically and also from what we see in terms of adoption of investors and participants overseas trading in the U.S. listed options market. That's going to continue to prosper. So I think that's, in terms of what's different this time around, those are a few of the things that we see that are different.
Okay, Lex?
So I had to define what the old new normal was, and it was a COVID-induced trading frenzy, I think, right? You could put on your pajamas, go down to your basement, and trade away. So we saw a gigantic spike in option volume during that COVID phase. It was also a time when, kind of a chaotic event, right? And people who became more educated in the option space, and the internet's certainly done a lot of that. We have many educators in the space now. People stayed with it, I think. And the great thing about options, and I think people have learned this, is that it is a great product around chaos. When there's things that are just hectic, and we know there's going to be another one, people really have gravitated to the options market. And I think I don't know if it's an old normal or a new normal, but I think it's going to continue. And when these chaotic events happen, options are a great place to be.
So we're talking about people. So first and foremost, I wanted to thank Tricia and the whole team here for putting this event on. It's great. And Trafix is a global fintech company and broker neutral platform. What we've seen, and I remember too in those early days of the pandemic, I was in a trading role at the time and running an options trading desk. And in early March, we heard that news come out of pandemic and everything we didn't even know what was ahead. But it was literally walking out of the office with a monitor under one arm and then a PC under the other one and setting up at home. And I think that what I've observed in the seat that I'm in now, especially with a lot of our customers, is we are in a new normal in the sense that so many of our customers, when it became decentralized and they were working from their basements or their home offices, they no longer had that tech person, if you will, on site that they could go and call on and yell out their name and come over and work on the computer. And I think it forced a lot of our customers, young and old, to take a look under the hood, do a lot more customization, look at their settings, and they became much more engaged with the tech stack, if you will. And those things, now that we're back in the office, a lot of our customers, I would say the majority of them are back in the office 4 days a week. If you're in a trading role, 5 days a week. And that demand and user level engagement with the tech stack, that hasn't decreased at all. If anything, it's just continued to get more prevalent along our entire customer base.
And Jim, new normal, old normal, something else?
New normal modified. So
All right.
I don't think we're going to see the normal pre-pandemic environment ever. It's not a bad thing in the sense that, like our customers who learned a lot more about options, especially some introduced to options, some self-introduced to options through the multiple great platforms that the retail providers use to educate those customers. And I think as exchanges, we had the luxury of being able to listen to our customers. And in the case of NYSE, we have 2 trading floors, most by any exchange operator. Yeah. First plug. Well-deserved plug. It's not easy. It's definitely not easy when you have to shut 1 or 2 down, maybe, or open one up and not open another. And we did all of that, and we did it lock sync with our customers and those inputs. And I think that will be, and I think Ed Tilley said it on one of the panels early on coming out of COVID, and I agree. I think we did it so well as an industry, we would literally just hit rewind and play, God forbid it ever happened again. So hopefully it never happens, but we'll be prepared.
Absolutely. All right, lightning round number 1. Geoff, what's your favorite beverage?
Well, at the risk of sounding like Brett Kavanaugh at the Senate hearings, I love beer. So I'm a beer guy.
Lex?
A mezcal margarita.
Nice.
I like to keep it clean, so I'm a vodka soda guy.
All right.
I want to first thank you for the question.
I don't know what you're talking about.
I don't drink often, but when I do, it's whiskey, and it is James FC Hyde.
I thought we were going to do shots first. Where is it?
I think S3 took care of that last night. Thank you, S3.
Okay, so in terms of people, on prior trends and predictions panels, we were focused on retail. And it was also said that market makers extended into multi-list and institutions started trading more options because they wanted to interact with retail. Who are the people now that we're focused on that we're hoping is going to continue to grow our business? Lex?
Me? So my role, most of my week I spend speaking to retail customers, and platform providers, people who are in the business on the retail side. I'd say there's two striking types of folks who are gaining entry or want to gain entry into the market. The first is the overseas group, I'd say. I spent a lot of time talking to folks in the EU, a lot of time talking to people from India. That's very popular now. And then actually we're starting to see an uptick in folks from Africa who are getting interested in our markets as well. So that's one striking pattern I've seen. The other one is I spent some time recently in New York City. I was at a university event at Quinnipiac, and it was all college-age kids.
Game.
Right? It was unbelievable. Yeah, it was game. That's exactly right. That group is enormous, and they are smart. They're thirsty. They're really interested in options, and their skill level's outstanding. It's not just, hey, what's a call and what's a put. It's well beyond that. So those two groups are what I've been seeing in the space.
Sure. We're seeing a lot of those trends as well. There's definitely been an uptick in user interest in Europe, MENA as well. UK has been an area of growth for us. What we've seen primarily, our typical customer would be that larger vanilla agency desk, and what they're looking to do now is they want more. How do they facilitate more trading flows? How do they bring more business in the door? A lot of that is being facilitated through basket trading solutions, multi-regional, multi-currency products. So we've been excited to work with our customers on that, and we'll talk a little bit about it later. But flex trading has been another primary focus for us, and those are really those main drivers of growth that we're seeing right now.
Okay, and Dave, how about you?
Yeah, I would echo the comment that Geoff made about spending more time overseas. We've always kind of kept a gauge on what amount of flow from whether it's Europe or Asia makes its way into the U.S. listed market. And I think historically we've always kind of seen it around roughly 10%. And I'd say we've definitely been spending more time as there's been more demand coming from overseas. And part of it's, I say some of the market structure that's significantly different. And I think, part of those users, while they may be very sophisticated in terms of what it is that they're looking to hedge out or events that they're looking to capture, I think one of the things that we've spent time in recognizing that, the European market structures are significantly different. And so not just talking about new tools for those new participants, but making sure that they understand the market structure that they're playing in and how significantly different it is versus what their current landscape looks like.
That sounds like a big effort for education. Yeah.
Yeah, absolutely.
And Jimmy?
I think what we're seeing a lot of is sort of a hangover from the adapting to
S3?
Well, some later on, adapting to just institutional trading in an environment where maybe a flow wasn't available. So think QCC and think other order types, not just QCC, certain type of auctions, large auctions, all or none auctions. We're seeing folks that you probably wouldn't have seen in prior years, dabbling in those instruments for all the right reasons. And obviously, as we enjoy the great environment that we provide for our retail customers as an industry, those retail customers, in fact, seed other flows that are part of other trading. And I think we're just seeing more of the ripple effect from the great 40+ million contracts that trade on a given day.
Ready for lightning round number 2? Do you ask for permission or beg forgiveness? Lex?
Oh, definitely beg for forgiveness.
Dave?
I would always say beg for forgiveness. You can definitely ask my colleagues about that one.
Do we need to ask Jimmy to answer?
His answer.
And Geoff?
Well, being a bit of a history person, that expression comes from Admiral Grace Hopper, and she was an early pioneer in computers. And where that expression comes from, interestingly enough, and I think it applies to this group, is she spoke about that expression in terms of working within the military in an organization like that, where decisions are made by committee. And she was someone who said, I'm usually begging forgiveness, because when you work in a large organization, I know, like all of us do, sometimes it's hard you can be crippled by that paralysis by analysis and being able to make a decision. So I think all of us are accustomed to, we try to move quickly and we try to respond to our customers' needs, efficiently and as best we can, and do it, quickly too. So I think we're all aligned on that.
Except for me. I think everybody who knows me knows that I'm the one person up here that asks for permission.
We'll get you over to this side.
Yes. I'll thank my mom for that, but it's another story. I digress.
Calculated, adjusted, beg for forgiveness.
Okay.
Well, don't do it all the time, but when it's right to do it and you think the odds are in your favor, probably take the risk.
All right, I have something to learn from you.
You got to try that.
Yeah, I got to try. Thanks.
Not right away, though.
All right, moving on to products. Product evolution was discussed in prior years. They talked about weeklies and single names. They talked about 24/7. There was mention of products that allow us to capitalize on stuff that's happening that's hot in the moment. So expanding the number of strikes on GameStop, for example. Are these products still things that we're focusing on, or is there something new coming out? Geoff?
Definitely, and that's been a resounding theme of this conference and the panels we've been on. Zero DTE, I think, has been mentioned on almost every single panel. And what we see too, in something, a product like index products, SPX, for example, there's over 45 expirations listed for that, right? But even to that point, in having zero DTE, there still is that demand, and we come back to what I was saying earlier with users and the customization aspect. Whether that's from a technology standpoint and interacting with an application and a UI, but they also want that flexibility from an investing standpoint. And what I see over the course of my career is that flex trading used to be somewhat of a back alley, if you will, of the options world, where it was misunderstood and folks didn't really understand that it truly was created to be a hybrid between a listed and an OTC contract. But it looked and felt a lot more like an OTC contract. So, customers didn't really heavily utilize it unless they were trafficking in maybe, names that trade by appointment. They needed certain strikes listed and so on and so forth. But what I've been seeing, over the last 6 months to a year, and it's been picking up and increasing in velocity, is the demand for not only, more flex trading capabilities, but how do we do it and how do we trade them in a way that's compliant, that aligns with CAT reporting. That's such a huge part of my business, of what we do every day for our customers, and we're proud to do that business. But it's mainly about how do we trade flex electronically, how do we do it effectively, and how do we do it smart. So we've been working on that very heavily.
There's not many people in the audience, but I'm wondering if it would help if you could explain what flex is, just in case someone doesn't know.
Sure. So flex options are, there's a couple different types. You can do American expiration. So if you set up a contract, let's say that you want to pick a specific date out in the future, you could say, I want May 4th expiration, and I want to trade a 97 half strike. American would say that you can exercise any time between now and that expiration. Now, if it's Euro, which is more predominantly traded, it can only trade at expiry, right? You don't have that, it's more like an index product. So a lot of customers, they'll like that too. Another advantage of it as well is that, especially if you're in some of those more less liquid names, and you may not want the rest of the street to know what your position is and what you're doing, it doesn't go across the consolidated listed tape like everything else as well. So there's also that anonymity aspect of it too, and not being able to kind of track flow, which, Lex, we talked about that too, how, from a user education aspect, now it's the retail folks too, or they're looking at things like open interest. They want to see the big prints that go up. If they're trading Tesla, they want to see 10,000 contracts printed and, some 5 delta option or 10 delta option, whatever it is. They want to see that, and they want those tools. And so Flex is, I think it's an old product. It's been around for a while, but it's becoming more new and exciting. And, we're happy to help our customers with it.
I would just going to make that point too. And interesting enough, Flex options have been around for, I believe, 15 plus years. And so yes, it's somewhat topical now, but the reality is that's a product. We talk about new products and what's going to work. The reality is that's a product that has been around for quite some time. And so why now? Like, why are we talking about this now? And I think the interesting thing is that the reason we're talking about it now is because there's a whole new segment in the marketplace that is now interested in optionality or defined ETF products where they can get a certain amount of equity-based exposure, you're in a broad-based index or in a single stock. And that normally used to take place in the OTC world. Post-financial crisis, we saw a lot of that move back to the listed space. And so the new product is these types of ETFs or investment trusts that can utilize flex options to create that exposure, but they're doing it in the US listed market. And so the product's been there for a while. However, there's new interest, and we're leveraging an old product. And sure, we've adapted, and that product has evolved in the sense that there's more technology around it from a reporting perspective. People can trade those options electronically now, so that continues to evolve. The reality is there's that product's been around for quite some time. I think the industry has just done a great job, evolving that asset class.
Yeah, one thing I would add, and Geoff mentioned one particular choice in a flex, and it's an important one. And for prep for this panel, when we talked about it in the pre-panel, I wanted to look at I randomly looked at 2 instruments that I had an interest in, and I went out a year and I looked, and all the open interest in every flex that was open happened to have that attribute of European exercise, which means you take the risk of getting exercised early. Said differently, if you're the seller, your determinism on that trade is much higher. So said differently, preferred path. And as I did, and timing is very important here, I was also able to share publicly today that we are now, and I think it's 9 years running, have talked about cash settled flex. And I think our rule, and Chris Toomey, if he's in the room, will protect me if I botch the date up here. It was approved to add as an option on flex, very important, the cash settlement. And just like you could pick European, you'll now be able to pick cash settlement. And that, again, that date was, I think, November 29th, some 3.5 years ago, 2019. So what took so long? Well, if you've ever launched a product launch, you have to change sometimes the ODD, which is not an easy task. You also have to get it through SEC, through a comment period. And if you think about how long that took, it's kind of ironic that I don't believe, and again, Chris, the one that would correct me, I don't believe there was a single comment. So what took so long? It probably was controversial. Maybe we shouldn't be doing it. Maybe you should second guess it. But we finally are able to launch it. I think our list of 50 most active, highest volume, highest notional, some combination thereof, will create this list of 50 ETFs, and we'll have, for the first time, after 9 years of thinking about it, as an industry, available exclusively where rules are applicable, which will be MEMX, or Arcoside. And I only bring that up because the input we get from our customers, we take it seriously, and I'll give a plug to all my competitors that have launched popular products that are needed today, and say, don't give up, continue to listen to that input, and this is just a great example of say no to no, or sometimes begs for forgiveness, make a decision.
9 years of latency at NYSE, that is.
Oh, if we're going to go down that road, we're going to talk about the crystal ball that predicted that we should have a moderator in the future of options who's actually not trading options today.
Coming August 7th. Thank you very much.
I think I'm losing this battle. You got a seat down
Lex,
there.
any products? Any new products for you?
I agree with the guys on the flex issue. I think from memory, Henry Schwartz might have said that flex trading is only about 1% of option volume, right? Which is obviously very small. So totally agree with you, all your opinions on that. One of the things that we're getting a little bit of interest in, and I'm not sure how this could be a product or not, but is a notional sort of investment in options. So the notional investment would say, I want to own $200 of this call or sell $200 of this call. The $200 might equate to less than one contract. So it becomes a fractional sort of contract. Certainly doable. There's definitely risk because I don't think OCC is going to clear half of a contract, so you have to figure out what you're going to do with the other half. So there's definitely inherent risk there. But that opens up that universe to the university kids who don't have a ton of money, and they can still all of a sudden access the market in a different way, the options market. So we've seen a little interest there. I think generally, though, our industry is pretty good at assessing demand, right? And I think this zero DTE they assessed the demand for this. Retail people love that product. I'm not sure the pros love it so much, but the retail folks really love it. So I think generally, our industry will come up with products that from a demand type. Lastly, I'd say Jim's point about cash settle. We always fight the battle with the retail world of early exercise, and now you've got this deliverable when you didn't know you were going to get assigned on something. So if there's a way to have some sort of cash settle on actual single names, that would be sort of interesting as well. It takes a little bit of the risk profile out of what could be left on an assignment.
I wish you would have wrote a comment letter and talked about how you'd like to see it in singles, because I don't think the SEC has an appetite for it.
Yeah, right. So.
All right, preferred work environment. Remote, office, hybrid.
Preferred is clearly a hybrid, and I enjoy coming to work 5 days a week today.
I'm a bit of an old school person, so I enjoy being in the office with my colleagues, but having a little flexibility.
Come in 5 days a week.
4 or 5 days a week. I still have it. But I think that one day of flexibility is, it's nice.
Yes, it is.
Preferred, I like the hybrid, I think, model. I live outside of Chicago, so commuting to work would be a 2-hour ordeal.
Ouch.
Yeah, it's a horrible commute. So I think hybrid for me.
I like the hybrid model. For us, it's, we're really hands-on with our customers and the education aspect and working directly with them. So, I spend most of my time on site with various customers throughout the New York area or wherever needed. And, the majority of our team does the same thing, so it's, I think the hybrid model works. I don't think that, I think some other panelists have spoken about it too, that, once that genie's out of the bottle, if you will, it's not going back in. People will need to be able to go and run errands and, work with the kids and do different things. So I think it's here to stay. I think we'll see some version of a hybrid model persist.
Okay, moving on to technology. In the prior years, the resounding themes were efficiency, resiliency, and simplicity. Are these trends continuing, or are we shifting into something else? Jimmy, you want to start?
Yeah, I would say determinism and all the variables you mentioned obviously have raised the bar for the table stakes. And you got Dash up here, you got Trafix, familiar with both of those platforms. It's just a bar that has been raised to a level where it's beyond table stakes probably at this point. And for exchanges, we hear from our customers and we do our best. We're rolling out our last platform between equities and options onto Pillar at the end of this year. And when that happens, there's already talk about what do we do next. So get everything on the same stack, listen to your customers, what makes it easier for them, different attributes across the different SROs. Of course, you have to modify your offering, but at the end of the day, make it easier for the other side to interact with. And I think adding even beyond, we finished with equities, 5 medallions, 2 on the option side, like I explained. And then what's next? Do we look across into our future side? I mean, those are things we're hearing already from our customers, and we're not even fully rolled out.
Who wants to go next?
I'm next?
Yeah.
Okay. So, my answer is going to come obviously from the retail side of things. What we're seeing in terms of technology demands, I guess, the latest thing is, let me step back one sec. What I learned about the retail customer is that their workflow is a lot different than I once thought. Most retail customers, they have a day job, and then they really love the trading aspect of it. So from that angle, what we're seeing is the use of bots and automation to help with their workflow. And what that does for the retail person is it allows them to set levels to get in and out of things. And most of the people we work with are spread traders. So they're asking for the ability to put a trade on and then protect it with a stop and a profit order, and maybe slivers of that, right, on top of it. So the bot world has really been very interesting. So it's an automated process. You set your levels, and then you can go to the Starbucks and let the machine do the work for you. The other good thing about that, especially for retail folks, is that it takes the emotion out of making that ultimate decision. Once you have your rules, you set it and you leave it and you let the machine do the work. So we see a lot of that on the technology piece. The other thing that retail tends to struggle with is that they're always looking for trade idea generation, right? So my past life as a market maker, my whole world was built in that bid offer, right? That's where I lived, in the bid and the ask. They can't live there. That's a negative edge deal for them. So they need to come up with some ability to have a reason to make a trade. So we see a lot of demand for scanners that watches the market and order flow. That's a big one. And then other kind of technical tools that are out there as well. So those product enhancements, and we see a lot of that in the product world from our view. Yep.
How about you, Geoff?
Yeah, along those lines, of efficiency and simplicity, I think those things that Jim used a great term earlier. He said it's table stakes, right? Mm-hmm. Those things aren't nice to haves anymore for our user base. Those are absolute requirements. What I would add to that too would be customization. We talked about that earlier, and customization is such a big part of what we do. And there isn't one out-of-the-box build that you can just take off the shelf and give to a new customer and say, hey guys, good luck, check in when you need us. The amount of individualized work that we have to do, even though you have like agency, broker, dealer desks that may be performing similar types of transactions with the same hedge fund customer base, the way, to Lex's point too, and how retail guys trade, each individual firm may have their own way of, interacting with the system, how they set up different filters and blotters, and we've seen increased demand too for, being able to kind of pod off different views and stuff, because maybe there's some person on the desk who's doing more principal workflow, more on the market making side, and maybe you have some folks who are doing the more traditional agency type business, so they'd want to see that separately. So customization is a big thing I would include in that category with those three items.
Yeah, I would just echo some of the comments. I mean, all the work that's gone into some of the exchange re-platforms to have that resiliency. So when we get these big, market moving events, the ecosystem and can continue to handle that level of adoption. That just makes it that much harder for a lot of institutions, regardless of how large they are, to continue to maintain some of their own technology stack. So, whether it's the largest global investment banks in the world or some of the smaller market-making firms, anywhere there in between, it's very hard for them to continue to stay ahead of the curve and maintain their own stack. So, I'd say the ongoing theme of outsourcing, technology, buy versus build, it's always something that people are concerned about. Well, if we, buy technology, do we still have that, customization that we were talking about? And so I would also echo that in the sense that providing customization capabilities within, outsourced technology stacks has never been more important. And then also giving, clients the ability to kind of, have transparency tools into how those orders are working, how those configurations have been applied, who made them from a compliance perspective. Those are all super important things.
All right, name a pet peeve. Go for it, Dave.
It drives me nuts when my kids leave lights on.
Me? Oh boy, I have so many of them.
We're running out of time, quick.
Okay, slow drivers in the left-hand lane. That drives me nuts.
Thanks for not mentioning my Corvette.
I would say I would say mine, a lot of people in this room will probably agree, especially from the trading side, but when people say that they, well, friends of mine, and they'll say, I just put an offer in on a house. Well, you bid for the house, right? You're selling the house or are you buying it? And that's so prevalent in everything that we read. So buy something for a price, you sell it at a price, so.
Yeah, actually, in the rehearsal, I had a pet peeve. I scratched it when I heard that, and I said, it's always bid for and it's offer at. So if you've traded, it's very common sense, and if you haven't, it's my new pet peeve. Thanks for bringing that attention.
You got it.
All right, last but not least, regulation. So last year, we talked about lack of clarity in crypto, which is a given, right, because it's a relatively new product. But here we are, sitting on and waiting for clarity on significant SEC market structure proposals. How is this wait and see uncertainty impacting your business, and what do you think the future holds?
The obvious answer is anytime there's not clarity, there's hesitation to actually proceed, right? The last thing anyone who's being regulated by the commission wants to do is go follow the rule, right? Specifically with crypto, though, we actually were going to launch crypto at our firm, and because of the lack of clarity, we've kind of pushed that back for now. So you obviously don't want to start trading something and learn that you're doing it all wrong and non-compliantly. So it affected our business that way, that we're going to have to hold that off. So.
Absolutely, I would agree with that, and I think that you nailed it. We're in a holding pattern right now, and a lot of conversations we have with our customers center around CAT reporting, case reporting, and anxiety around that process.
Yeah, I mean, I think I would just say it's concerning in the sense that we all know that there's pending regulation on the horizon, and as technology firms, we need to be able to change our systems to be able to comply with that. So when you layer on top of potential regulatory changes, new exchanges, re-platformings, whatever it may be, it's really consuming a significant amount of everybody's technology budgets and prioritization. And I think the thing that can be concerning is at some point there's only so much development resources that we all have, and it's cutting into the time that everybody has to build new technology that's accretive to allow the marketplace to continue to evolve.
I would echo all the statements made on my colleague Megan Dugan's panel earlier, with a lot of smart people, both in the room at the time and clearly on that panel. And I think our letter, co-authored with a small retail firm, right, Charles Schwab, and a small router market maker, Citadel, and a small exchange, NYSE, all agreeing to kind of do something a little different than what Gensler proposes. Is a good thing, it's a healthy thing, and I just look forward to working through that regulation and seeing how, if any, effects come into the option world. But we play our hand pretty good. Option traders are known to think outside the box, calculated risk, delta, percentage chance of something happening, going in the money, and all that'll come into play.
All right. I'm going to step out of my comfort zone and take a little risk here and beg for forgiveness because we're late, but we have a little bit more to go. I'll skip to, we were going to do lightning round questions that were actually relevant to the industry, but I'll skip to the funnest one. Where's OIC going to be next year?
Not in Chicago or New York.
I think back to Florida, back to Tampa.
Tampa, okay.
I think Geoff and I have the same. We both think Miami. I suggested Miami.
Or we could do Nashville again, too.
That was fun, yeah.
Quick show of hands, would Nashville be okay again? No, you want to go somewhere different.
I like the line dancing. All right, if you'll humor me for one more moment, I'd like to just close with something in honor of my dad. What do you call a happy cowboy? A jolly rancher. Mic drop.
I like that
Thank
one.
you all for a great week.
Yes.
Safe travels home.
I love it.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.